Hey everybody, it's Alan. Welcome back to Real Estate with Alan. Let's talk about why new home builders are cutting, and slashing the prices of their new homes and why inventories are rising. We'll also talk about the exact time when you should be looking for either a rental property or your very first home to buy. And it's not right now, it's going to be in a couple of months. We'll talk about exactly when you should be looking for them. Let's talk about where the prices are going down more, which cities, which places are possibly going to go up. Yes, there are a few cities and places that are going to go up, and there are other ones that are going to lose like 50% of their value. There's been a lot of insanity the last couple of years where some homes have doubled, tripled, even quadrupled in price. And those are going to just crash and burn. So be very, very careful. Let's also talk about how the economy is going to affect these homes, your own home, if you've purchased one. And we'll talk about the effect of the interest rates and how they could possibly get to way past 9%. And then we'll also talk about how to actually buy a rental property and how to be successful and which states to buy into. You should never be concerned about buying where you live. You should be concerned about where it's going to make you money. All right, let's get into it. All right, let's start off by looking at, this is the actual fred.stowis.org website. This is the 30-year fixed mortgage averages in the United States. So pretty important chart here, but I want to make sure you guys understand that your actual interest rate on your home isn't as important as the price. Because if you buy a home for $400,000, right, whether it's a rental or your first home, that price of $400,000 will always be $400. You paid what you paid, and it's not going to change, right? Now, that home can increase in value, right? So that could be worth $600,000, $700,000 a few years later. But what you paid is what you paid. But your interest rate on your mortgage rates on that home, right? What you're paying, that can change. If you're at 8, 9% now, you can always refinance, get that down to 6, 5, even lower. So what's really, really important initially is you have to get the home for the correct price. And the problem is if you buy a home for $400,000 and next year it's worth $300,000 and you're upside down, you can never refinance again. They will not allow you. Banks will not allow you to refinance when you're upside down. But if your home was purchased at a good price, right? Let's say $400,000 and now it's gone up to $420,000 and you bought it at a really bad and you're paying really bad, right? So we'll talk about, let's say you're paying 8.5%, 8.75%. And you know, in a year or 2 or 3, you can always refinance, even get rid of that PMI and, you know, the private mortgage insurance. And then that payment can literally go down. When I refinanced a couple of my properties, the monthly payments went down by over $1,000 per month. So it's really important to get the home at the correct price. Worry about the rates later. You can always refinance multiple times. So that is the focus here. And if we take a look over here, so these are, you know, this is where we fell to basically just insanity. You know, I had this this isn't even as low as I've gotten. A couple of my properties I got at 2.5%, a couple more at 2.7. So very, very happy with those. I mean, goodness gracious. You never really, you don't want to put more than, you know, what you have to pay in at these prices, because this is just amazing. And you can see now the rates are going up, and this chart isn't updated, but I'll show you in a little bit. We're heading for 9%. And this is just historically, look at this. I mean, you've never seen, you know, even going back to 1975, 1980s, you're talking about 7 to 8%. We did have a skyrocketing here to 18%. And then, you know, they've actually come down, but now we're going right back to, we're probably going back to, I mean, I would say 9, 10%. That put us back in the 80s. Then we skyrocketed here, which would put us back to 1995. Right now, we're going back to the highs of 1995. Holy smokes. So that is what, you're talking about 27 years back. And so those of you that got in these 2, 3% rates is it's just amazing and incredible. So let's talk about how high we can go and why a 75-point basis hike is coming for the month of December, and then a 50-point basis hike for the month of January. And then I would expect at least another 50-point basis hike. So this is really going to create some buying opportunities of a lifetime, seriously. But if you take a look at right now, this is as of November 10th, but really this is going to be as of November 13th, 14th, but because it hasn't been updated. But if you put down a 20% down payment, and most people, you don't really have to put down more than 5%. Don't worry about the PMI. Don't worry about anything else. You're way better off initially. And again, if you need to talk to me, just send me an email to realestatewithallen@gmail.com, or you can just sign up to my Patreon. Go to Patreon, type in Invest with Allen. And once you type in Invest with Allen in there, you can sign up for Patreon. Then we can discuss where you should be buying a home. You can tell me how much money you have, how much you want to put down for a down payment. And you can even show me properties that you're interested in buying. And I'll tell you if this is worth upgrading, worth renovating, or if you should probably pass on it. Usually if I see any kind of cracks, any kind of structural damage, I stay away from that. Water damage, I stay away from that as well. Usually it's just not worth, look for stuff that looks terrible, but it's really cosmetic. And I can point that out. I've been buying real estate for 20 years now. So on a $300,000 loan, and this isn't updated. Once we get the 75-point basis hike added onto this, we are looking at basically 8.99%. So, we're going up there. You're going to get another 50-point basis hike after that. So get ready for some major, major discounts, because these inventories are going to increase. And a little bit later in the video, I'm going to show you these home prices that are being slashed by 20 to 40%. Some of the homes have been slashed by $70,000. Not even kidding you, $70,000. And really, this is the best case scenario you'll probably ever get in your life once we bottom out with this actual market, with the housing market. Goodness, because you can always refinance. Remember, you can take this 9% or 8% down to 6 or 5 or anything. The most important thing is to get the home at a good price. So that's just key. So let's take a look. It's a little monthly breakdown. I'm on bankrate.com here. Let's just say the average home price right now is around $425,000, and this is continuously coming down. I wouldn't be surprised if by Saturday, Sunday, Monday you see this thing come down to easily $380, $390 for the average home price. But let's just say you put down a small 5% down payment, okay, on this home, and you're at 8.3% interest rate, but you will not be. You will most likely be around 8.9%. And even at that rate, it might be in your best interest to lock in that rate. The last property I bought, I ended up getting what did I get? I got 2.75%. And by the time I just went through everything, within 3 days, that had jumped up to 3.1% because I did not lock in my rate. And, you're talking about me buying properties for like 19 years and I still make stupid mistakes. So I ended up, it's not really a big deal. It was like a $50 a month difference on that rental unit I bought. But that's $50 a month across the next 20, 30 years, maybe even my lifetime. It's going to add up to a chunk load. So please lock in those rates. Very important. Now, if you take a look over here, this is, just a zip code for California, but you're looking at $4,013. When I actually, locked in a property, I suppose in 2021, I believe it's summerish, sometime around there of 2021. I bought another property in Indiana for this price, and my monthly payment on that property is $2,400. Yes, I did put down 20%. So yeah, obviously it's going to be, a little bit less in terms of the actual, amount I own, that I use, but I have a slightly higher credit score as well, which really, your credit score above 720 doesn't make a difference. So if you have like 720, 740, 799, 800, it doesn't matter. Generally above 720, your payments, your monthly payments really will stay the same. So your goal truly is, when it comes to getting the best rates possible, is to try and get your credit score to about 720. Anything past that is just a waste of your time. Complete waste of your time. Yeah, so don't look for any magical numbers above that. I don't care if you're getting a new vehicle, you're buying a rental property, your very first home. You just really want to try and get to 720. And another really key thing is I do help people get their credit scores improved. And I've done this for pretty much my entire life with my own credit, with everybody else's. There are ways to get everything off and get that credit back on track. I guarantee you that. The system is made, where you can contact all 3 credit bureaus. You need to know who to contact, who to mail out, what letters to mail out. Again, if you need help fixing your credit as well, again, just make sure you talk to me on Patreon. Again, that link will also be in the description. And you can also email me at, Real Estate with Alan. Now, let's take a look at bond yields. Oh boy. So we're now with our 10-year at 3.81. So I am really expecting, unfortunately, I am expecting for the month of December a 75-point basis hike. So Jerome Powell is on a roll, and they said they don't mind overdoing it. They're going to over tighten. Jerome Powell has said this multiple times. He basically said, what we're going to do is we're going to over tighten, and then maybe we'll just throw some money into the markets, back into the economy if we overdo it to fix our mistake. So get ready for another 75-point basis hike. Okay. And again, let's take a look over here. Housing inventory. So these are the active listings for the United States. And you can see, right, from 2016, the inventory was dropping. But look at these lows, right? In February, we saw these lows in January and February of 2022 right here. That was the peak. Now you can see the inventory. Actually, from this low right here, which is kind of unbelievable. But from the lows of February 2022 to right now, which is November, December highs, the inventory has gone from January of 2022 to November of 2022. Has increased by 159%. I'm not even kidding you, 159%. And this inventory is going to only continue to increase. So you really want to have, I'd recommend at least somewhere between $3,000 to $10,000 set on the side, even more if you can. And you're going to get some really true buying opportunities in the housing market. It's going to be glorious. And those of you that wanted to get another rental property, that wanted to purchase your very first home, we can talk about that. I do audio and video calls as well. Once you do sign up for Patreon, we can chat. We can go over where you live, where you're trying to buy a house. We can go over the neighboring areas or the suburbs, and then we can go where you should be buying rental properties. And again, now that I've sold and rebought new properties, yes, I do not have any rental properties within like 100 miles of where I live. I've bought most of my rental properties in 3 states, Kentucky, Wisconsin, and Indiana. I've mostly been buying in Indiana now, and I'll let you know why. I'm thousands of miles away from where I buy my rental units. Again, one of the really important things you have to know is that you want to buy in a state that protects the landlord. You don't want to be in states like Illinois where it could take you 2-3 years to get a squatter out of your home. It's very sad. There's some states where, imagine you're paying your mortgage every single month. Somebody has refused to pay their rent and you can't kick them out. You never, ever want to purchase in states like that. You want to know the laws. And I literally spent a decade, and every year I kind of go through the list and I try to figure out where I want to buy, where I don't want to buy, the advantages, disadvantages, and where I'm going to be protected as a landlord. And also, I want to take a look at where I want to live as a human being. I switched a couple of states, and I've learned I enjoy being by the ocean, but I also enjoy being somewhere that also offers me all 4 seasons. So I do have multiple properties. But if you're gonna buy your first home, you really want to never ever end up in an upside down situation. And so let's switch over here to monthly supplies of new houses. This is glorious for those of you that are looking for your first home and even rentals. But as you can see, the actual supplies dropped in August of 2020 to literally like nothing, 3.3. And as you can see now, it's steadily been going up, up, up. And look at 2022. I mean, we're probably going to skyrocket. And I'm assuming we're going to reach these levels of February of 2000. Let's take a look. So this is January. The peak is January of 2009. I would not be surprised if we reach these peaks. And another crazy thing, which just doesn't make sense to me, truly doesn't make sense to me. I've been just kind of driving around. I decided to, I'm going to fly to a couple of these cities, turn it into a little bit of a vacation, but also some research as well. And these new construction builds are continuing. Inventories are piling up, and they're still building new homes. They can't sell the homes they have. They're slashing prices by $50,000 to $70,000, even more. There's a couple of places that I saw, which is just shocking. There was a $1.8 million property that got slashed to $1.2 million. $600,000 price cut. And this thing is still not selling. I mean, I'm shocked. So, let's take a look here. The monthly supply of new houses in the United States. And let's go over here to actually Lennar.com. Look at this craziness. This is in Kyle, Texas over here. And then we have, Lago Vista, Texas. But this home was slashed by $50,000. $50,000. And I think before any of these things even sell, we're going to see another $20,000, $30,000, $40,000 price cut. Before everything is said and done, could this home end up at like $299,000? Yes. And not every single area in the United States is going to see some extreme price cuts. And some might even slightly go up. Remember, there's areas just didn't go up into like crazy, they didn't moon. And look at this home right here. This is a oh my goodness. This is a $77,000 price cut. Just imagine if you purchased a home and now you're upside down $77,000. That's ridiculous. Actually, I ended up purchasing a home recently, and the house I bought, I just lowballed them. I said, yeah, okay, you don't take my offer. You don't take my offer. I lowballed them by $105,000. Okay. And I wasn't even interested in purchasing the property. I was kind of like, because I was already going to end up paying, I locked in the rates at that point at like 6.25%. So the property was $505. And I was like, you know what? I'm going to throw a $400 price at them and see where it goes. The offer got accepted, and I purchased that 3-unit property for $400,000 at 6.25% interest. So, we're entering a market where you can start lowballing some of these properties, and they're going to literally say yes, which is beautiful. The very next thing that's going to follow, trust me on this as well, is I follow home prices and I follow the Lambo index. And the Lambo index is also telling me, as you're seeing price cuts in these Ferraris and Lamborghinis and these exotic cars, it's telling me that there is going to be a lot of repossessions that are coming our ways. There's going to be a massive car crash. I'm talking about biblical proportions car crash. And you're going to see a lot of these car prices come down to, oh, goodness gracious. And so if you're interested in purchasing a vehicle or a home, hold off. Do not buy either one. We're most likely looking at good buying prices for homes in the next 30 to 90 days, I will send out that alert. Again, make sure you're subscribed to my channel here, and also follow me on my other channel and subscribe at Invest with Alan if you're interested in stocks and cryptocurrencies and buying. Remember, your life should revolve around diversification. You should have a home you enjoy living in, okay, and have a good, comfortable life. You should have rental properties, and you should be investing into the stock market as well. And then when you take your proceeds from the stock market, you buy rental properties. Then you deduct all of that. Remember, you can take a 27.5-year deduction on these properties and even do bonus depreciation. That way, all the money you make in the stock market, you can now tax deduct and not pay any taxes. IRS is literally giving you a gift. Okay, here's a gift to not pay taxes because you're a homeowner, because the IRS and the United States of America, they adore people that own properties. And it's a security thing. They know that if you own a home, you own a rental property, and you invest it into America, that you're more likely going to be a decent human being that's not going to do anything shady, because you have these properties, you have these investments, and they're going to trust you more. And you're going to be rewarded by not paying taxes. If you were ever interested in knowing why people like Donald Trump never paid any taxes across the last 10 plus years, is because you get awarded. And the last thing is, we're going to have a massive bull run in the stock market, and you're going to end up making hundreds of thousands of dollars. And you don't want to take that $100,000 profit and, say, hey, Uncle Sam, here's 50K. No, you don't want to do that. You want to keep the whole 100 grand. And that is really when you take your attendees from your stock market and you take that money and you put it into real estate. And that's really, truly the path to wealth. Again, thank you for watching. Subscribe to the channel. Follow me on my other channel, which is Invest with Alan. That will be in my description down below. And catch you on the next video.